off of the horrific first half of this year, in China, you're now seeing sort of typical, rebound numbers happening.
Okay. Are you worried that the Chinese government has created a sort of synthetic economic environment just to say, look, we're back on our feet, we're getting going again? Or do you think this whole infrastructure play is for real and it is sustaining? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. It helps us understand if this is the sort of video you think we should be producing for you. You can also leave your comments below. Helps us understand the sorts of questions you think we should be asking, how you think we've done, and of course, what you thought of Mark Selby and his view of the world of nickel. You can catch this as podcast, article, and transcription on cruxinvestor.com. And of course, for our Crux Investor Club members, you get early access to this video. You also get an exclusive portion of this video, services, and lots more macro insight. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We catch up today with Mark Selby, who is a nickel market commentator, also CEO of Canada Nickel Corp, TSX-V listed nickel explorer and developer with assets in Canada. We talked to him today about the nickel market, the macro factors affecting pricing, demand, certainly in China, Philippines, and Indonesia on the supply side as well. We look at what's been happening with prices, what the implications are for nickel juniors, and generally the supply story going forward for the rest of this year, and what the possible implications are on the pricing to end of 2020. Within the club section, lots of you have sent questions in. We've put those to Mark. We talk specifically about carbon tax implications there. What sort of pricing do we think will hit? We also look at urban mining. What does urban mining mean? And again, where does it fit in the supply chain? And what does Mr. Elon Musk think of it? So lots to discuss. Take a look in the description below, some of the topics we cover. Anything interesting in particular, click on the number beside that. That's called timestamp, and I'll jump you to that part of the video. Otherwise, sit back and enjoy what Mark has to say about nickel. Mark, how you doing, sir?
Very good, Matthew. How are you?
Yeah, not bad. Not bad. Ready for our 11th week in a row talking about the world of nickel. They said it couldn't be done, but it could be, and we've done it.
There we are. And I am actually had the right price call this week. So
you
say the same thing long enough. You say the same thing long enough, randomly you will be right one week. So
I know hundreds, if not thousands, of uranium investors who would agree with you. But it's true. So I mean, it has. So finally, you've got it right. So tell us what's happened.
Yeah. So there was no tweets this week from Elon Musk or comments. So and there wasn't really any other momentum drivers going on in the market. And again, after two, basically in 3 or 4 weeks, moving up 8%. The price needed to consolidate here. As I said, we'd likely consolidate. So that we've seen the price come off. The good thing is, in terms of actually, prior weeks here, I've been saying, it's been momentum primarily from different sources. But the good news is we're actually finally seeing some fundamental follow through. So obviously there were some stockpiles in China of various materials. That was delaying the response to that we've seen in other metals already. And so obviously they've worked through those inventories that were in-house. And you're now seeing, prices, premium inventories all heading in the right direction. I think we talked last week about the massive jump in 300 series stainless steel production, and we're seeing jumps in sulphate production, not quite to that extent yet, but it's now on a positive year-over-year note. And again, with anything, it's nice to see sort of fundamental data, price data, premium data, and inventory data all heading in the right direction. And that's what we're seeing in China today.
It's amazing. I mean, like you. Yeah, I think you're right. It was all kind of momentum. I think the Elon Musk comment got everything moving, got conversation happening, and shone a little light on nickel, which it was had been a little bit unloved. But we're back to fundamentals now, which is great. I think that's great. You've got a better line of sight as to the reality of the situation. So, I mean, talks about what is happening, in places like, what are you seeing in Philippines? What are you seeing in terms of stainless steel production? Have you got any numbers?
Sure, yeah. So, the key thing, the driver, again, the different types of stainless steel production, 300 series is the one that uses the bulk of the nickel. And so, that's the one that year over year was growing, 17%. And again, it's been the thing I think most analysts are missing on the nickel market is, the ability to put in, high single digit, 7, 8, 9, or even double digit demand growth numbers, because those do happen, particularly in a rebound period for nickel. And so off of the horrific first half of this year, in China, you're now seeing sort of typical, rebound numbers happening. So, I think the fact that it's now spread into the battery segment. So again, first half sales were very poor because, and the markers were very poor because you had a big spike in sales in the first half of 2019, anticipating a reduction in subsidies that was coming mid-year. We're now sort of over that hump. And so, now you're going to see good year-over-year numbers in terms of EV sales, because the second half last year was a very weak comparator. And then you're seeing the other sectors in terms of plating and other areas in China starting to do pretty well. What we're going to need to see is first quarter was weak in China because of the shutdown there. Most of the Western economies shut down in the second quarter. So, we'll need to see whether the rebound in China is helping to spill out into industrial production globally. And now we'll start to see whether Q3 over Q2 numbers start to move in the right direction. Unfortunately in the West, the lead time for some of those numbers, it takes a little longer than in China to pull those together. So, it'll be another, over the coming month or two, we'll see, we'll see what those numbers look like.
So in China, stainless steel prices up, 20%? And
yeah.
I guess we're going to see what the next few months bring us. But do you think that, and we need to remind people, stainless steel is the big market for nickel. Okay,
yes.
We got to remember that today. That is the case. Where it's going, obviously, with the EV thematic in terms of the contribution of nickel in batteries, it's going to be significant. But today we're going to focus on stainless steel. So, is there a kind of synthetic nature to the market? Are you worried that the Chinese government has created a sort of synthetic economic environment just to say, look, we're back on our feet, we're getting going again? Or do you think this whole infrastructure play is for real and it is sustaining?
It is for real. It is boosting demand now. It is, again, the nice thing with infrastructure spend is it goes into tangible things. The tricky part is that you're obviously pulling spending from the future to spend more now. But again, what the Chinese government really wants to do is ensure there's continued job growth, continued economic growth. So the risk here is more to the upside than the downside, because they're going to continue to prime the pump to make sure that the economy is headed in the right direction and is very well entrenched, in terms of heading in the right direction. So it's real. Okay,
so that's on the infrastructure side, because you're going to be able to see what they're building, roads, houses, buildings, etc. Power lines. With regards to, we did talk a few weeks ago about the West is also going to have to react, okay, because China is making the things which the West traditionally consumes at a vociferous rate. Are there any signs that is or is not happening?
Yeah, no, I think the numbers, it's still a little too early to see whether that's coming through yet. I think it'll be another month or two. Anecdotally, when you're hearing, that a lot of the non-stainless sectors in the West, which is where most of the nickel in the West outside of China goes. And so, those are good. As we talked before, aerospace, oil and gas aren't going to come back anytime soon. Again, I think the sector that is encouraging in the West is the EV sector. You are seeing more and more countries provide, subsidies and incentives for people to buy electric vehicles now. And again, I don't expect that to slow down. That's one of the levers that Western governments have to try and stimulate their economies, because cars are big ticket purchases, right? So if you want to get your economic numbers moving in the right direction, it's those big ticket purchases that you want to try and incent to happen.
But there's a couple of points here again, because I think it's too early to tell how people are going to react. Because if I look at targeted unemployment rates, here, there, in the UK, and possibly certain countries around Europe where the governments have stepped in and they've done these kind of furlough type schemes. I think Europe has been quite good at it. North America, a little bit less so in terms of the money's offered. So, but that falls away in October.
Yeah.
Purchasing behavior at that point will be interesting because over here, at least, it's forecast that jobs will see unemployment will see a huge increase at that point. Okay, and that's going to affect people's buying behavior. So it's one thing to say, I don't think that the governments or automotive manufacturers will stop incentivizing consumers. It's another to go, I know how people will behave at that point, say October, but before the end of this year in terms of car purchases. Again, if you've got any data which says, the EV purchases are on the up,
I think in some of the key markets where they've already been established, we are seeing pretty strong growth in a number of those markets. I will get some more exact numbers for you next week. But I think, that is a massive risk. I mean, in Canada, we have the same thing. We're moving from a fairly generous, monthly stipend that was in place as an emergency bridge. And the government's assured everybody we're going to transition from this to our regular unemployment insurance programs. And there won't be any disruption at all, which will not be the case. We'll have to see that plays out because there's a segment of the market that's got far less money than they did before, and that's a segment of the market that spent everything they earned, because that was was necessary. So again, I think if that part of the economy that those people really do stumble, I think the government's going to have to prime the pump at that end of the market again. I mean, I think the lesson of Japan, the lesson we're set, in that governments have realized it's you need to print money, to help get the economy moving, because if it starts on a downward spiral, it can go to a very bad place. So again, I think they will err on the upside there. Again, for the gold bugs, that'll be that's they've always said that was going to happen. They knew the virus was coming, so they knew there was going to be lots of money printed. That I think they'll find a way to do it. It might take another 1 or 2 quarters if need be, but I think they will err on getting the global economy growing as soon as possible.
Okay, well, that is a kind of wait and see over the next few months as to how the world reacts, how the economies react, and Abenomics may or may not work. Let's talk about the big triangle between Philippines, Indonesia, China on demand. What's the picture you're seeing? Yeah,
so right now we're sort of got 2 of the 3 legs, and again, for people who are just hearing this the first time, this is really in terms of where both the intermediate, sort of medium term and longer term market, that's the critical piece here that's going to determine where nickel prices are really headed. So, how strong and continued rebound in Chinese demand are we going to see to suck in a pile of nickel that's going to be consumed? And then the supply trade-off is going to be, Chinese nickel pig iron production relies on ore from the Philippines and a couple of other countries. And then there's a bunch of Indonesian nickel pig iron production that's coming down the development path, over the next 12 to 18 months. So that's going to offset any reduction in Chinese NPI growth. So, where those 3 turn out is really going to determine where nickel prices are going. And so right now, what's encouraging is that one, we're seeing Philippines ore prices continuing to move higher. They're at a 2-year high. Inventories of ore in China are remaining flat. Again, people, heard before, it's critical right now that those inventories go up, because Philippines has a pretty pronounced rainy season in the areas where they do some nickel mining in the October to February period. So, their capacity to actually deliver ore to China will drop off substantially. And again, you can't flip a switch in some of the other jurisdictions to make that happen, to step in. So we're not seeing any increase in real increase in inventories, and literally, you're down to having about 2 months left before those rains really do kick in. So Philippines ore is a big plus sign in terms of Chinese demand. As we talked about, those kind of numbers are definitely in the big plus level. We'll just have to see whether they're able to sustain them, or do they roll over a little bit here. But again, from what we're seeing, it looks like they should be a sustained. So I think we've got a big plus in that category. And then the Indonesian NPI, there is a bunch of capacity that's coming into play over the fourth quarter and in the first quarter next year. I think it's intriguing that you saw a lot of refined nickel imports into China went up, and again, that's the last material that stainless steel makers want to use. So again, they can't be too oversupplied at all right now in terms of with Indonesian NPI. If you're seeing NPI prices go up and ore prices from the Philippines also going up, so I think the Indonesian NPI hasn't been able to keep pace yet. We'll have to see what happens in the fourth quarter. But right now, of those three, two are heading in the right direction, and one is still a question mark at this time.
Okay, well, let's talk about what the implications are there for investors in nickel. I also want to talk to you about carbon taxes and urban mining, but we're going to go and do that in the Crux Club section here. So I just want to say thanks very much for everyone who's been watching this. We are going to get into the bits which affect your decision making when investing in nickel as a commodity and the sorts of companies that you may be looking at. So we're going to talk to Mark a little bit about quite an interesting topic around carbon taxes and implications of that, what it could mean for miners. We're also going to look at the world of urban mining, what it means, what the impacts will be, and why it's necessary. So we'll see you again next week. And for our Crux Club members, we'll see you in a second. Mark, welcome. You're in the club now. You're in the club.
There we are.
I know.
The wall.
Yeah, the wall just goes up slowly, and now we're behind the curtain, as it were. But some interesting topic. Look, so just finish off on what you're saying. Obviously, what do you think the implications are for investors? With two out of the three seemingly heading the right way, and the third potentially. Well, who knows? Hopefully soon. How should nickel investors be viewing the market at the moment in terms of an investment proposition? I mean, I always say to people, if you sell nails, a hammer is always the solution. So try and just be, a little bit more, open about what you genuinely think. Because you can be more relaxed in here. You can tell us the truth, Mark. No sales.
There we go. The key here is, the medium to long-term story for nickel is very strong, right? We know the EV overlay is going to add a huge amount of demand in terms of already, historically strong stainless steel demand growth that we see, year in and year out. So the key piece here is, sort of how much volatility and how much turbulence are you going to have to go through until we get to this medium-term time frame. And so, the weeks that I was wrong, where I thought, okay, we've seen a nickel price move that was momentum driven, and we haven't seen that fundamental follow through, is because, again, within that triangle and other indicators, there wasn't really anything fundamentally that was going to support the price. So, that's why I thought, when price got to $6, that we were going to probably fall back towards $5.80 a pound, or over 13 and fall below back to 13,000 a pound. And same with the move up towards 14, thought, okay, that again, overdone. But, right now with two of those three heading in the right direction and we're up still around $14,000 a ton, I think that's going to, 2 out of 3 suggests that, okay, maybe we hold $14,000 a ton. I would say, until you see sort of all three things heading in the right direction, that's, where you're going to back the bus up and really load up, because there's going to be a spike, in advance of that, medium term situation. But, with 2 out of 3, I'd say accumulate. There's a risk that we'll see a flood of NPI that'll overwhelm the good things that we're seeing in terms of Philippine ore exports and Chinese demand levels. But for right now, things are headed in the right direction. So I would say stay long, look to accumulate. And we'll see how the rest of the year progresses.
Yeah, I think that's a solid answer. I know we joke about calling the price wrong. But
Yeah.
it's difficult when there's kind of momentum component in the shape of Elon Musk, espousing the benefits of nickel, and go and mine, and we'll give you long-term contracts. That's obviously going to move the market somewhat, but the fundamentals, as you say, were just not quite there yet. They've got a long ways to go to kind of genuinely show us that there is the long-term demand is there. The EV side of things just needs to pick up somewhat, and it has been pushed back slightly, obviously with the COVID, etc. And governments are trying to incentivize people and automotive manufacturers by creating large subsidies for cars. I mean, some countries are. The French have gone crazy in terms of their levels of subsidies, but that is what it is. Let's talk about carbon tax, because I think this is an interesting one. We've talked about this kind of green thematic, and I like it not just for nickel, but across the board. And there's a few companies that do it quite well, and there's a few companies that talk about it quite well, but don't necessarily do it. And then there's the rest of the mining industry who perhaps need to pay catch up. We talked about your net zero campaign, and trying to push that agenda. And obviously, outside of the club, you're doing that for the benefit of Canada Nickel Corp. Okay, but what do you think in the context of carbon taxes? What do you think the future looks like for junior miners with regards to that whole ESG component?
Yeah, no, I think the reality is it's coming. The European Union is locked on it. They've set some deadlines in terms of when things are going to happen, and if the EU is very good at very good in quotes, when they want to regulate something, they tend to go all in. And so I think the entire carbon scheme that's coming down the pipe for the European Union is going to happen. So that is going to do two things. One, it's going to cause other governments to start to sort of harmonize. They're going to get pressure from their constituents to have something to show that they are doing something for the environment. So I think you're going to see again a lot of countries more market priced based mechanisms for carbon. So I think that's going to be a key component of a lot of it that comes through. So you are just going to see a rising cost of producing CO2. So you need to think about that, as a dimension of your projects now is it great geologically? Is it great in a great location? And two, is it going to be lower or higher CO2? They're going to have a lower or higher CO2 footprint than average than the other producers, because that will be increasingly, not just a sort of tick the box disadvantage, but a real financial disadvantage as various schemes to tax carbon come into place. The other dimension of it is, again, it's going to be a patchwork quilt globally. So you're not it's going to be different places are going to have different regimes, and so you're going to see sort of carbon cleaning where I make a dirty product, but if I send it to one country and they do two more processing steps, the way the mechanism's set up, it doesn't really count necessarily the original source carbon as well as it should. So, I think there will be things like that'll happen. And unfortunately, China is going to be there. And I'm not sure, they are pursuing, big changes to try and reduce the environmental footprint of what's going on from their industrial output. But, again, that'll always be a leaky backdoor, that if countries don't have the right way to count it, and there's loopholes, then I think you'll see people trying to find loopholes to try and exploit that, which will diminish the net impact. But fundamentally, it's coming. It's going to be it's going to get more expensive here as we go forward. So you can choose to ignore it, but you're just going to set yourself up for a costly failure, a costly mistake later down the path.
I mean, that whole patchwork quilt analogy you described there, it's difficult because if you kind of get the West, which says, "Hey, we're doing it," whether it be Europe and the US, they're all going to have different levels that they're going to set, and different pricing that they're going to set, and then the whole international trade thing is going to become quite interesting. The carbon cleaning component, that's going to become, I mean, there's lots of ways people can do that. And we've seen that in other industries currently, where you kind of, you do sort of ship it to one country to, I don't know what, you kind of clean it in a way, you know, but you need a sense of what the carbon taxes will be to be able to work out what the economics are, don't you? So
carbon laundering, actually. Cleaning, laundering is a better word than cleaning.
Laundering.
Cleaning is a positive. Laundering. It's laundering. Yeah, it's carbon laundering. You know, that's the
okay.
That's and to be honest, we saw there's one industry in nickel that's been doing sort of environmental laundering for a long time. The plating industry. It's sort of a low value add activity. It does have an environmental footprint, and so historically you just see it migrate from jurisdiction to jurisdiction that has lower cost labor and lower environmental standards. And so it was always an interesting sign to see if an economy was starting to industrialize, because that was an industry that would tend to get a foothold there. So we used to be able to see sort of which of the Asian economies was really starting to ramp up, because you would see it shift in that way. Or within China, it was Guangzhou initially, in the early to mid 90s, and then you could see it as it moved to province, where things were getting clamped down on one area, that would move to another part of the country that was maybe a little less regulated. So I think the same thing is going to happen. It'll be a little more complicated, but you may see carbon laundering happening.
Carbon laundering, got it. You're probably right. It's a better phrase. Which kind of brings us neatly onto this thing called urban mining. Now, effectively, we're talking about recycling. Okay, that could be recycling automotive batteries, for EV cars, but it's also lots of other things too. The whole ESG component comes into play here too. So I just wonder how countries like China, who want to go electric for all the right reasons, so they can just breathe clean air, things like that. Do you think they'll be truly able to manage, track, control both ends? I'm talking about the copper, nickel, whatever, lithium coming out of the ground in the most ethical, green possible way, and the kind of end of life recycling of whatever the goods are, cars or otherwise, car batteries or otherwise. Is it all talk? Do you think they will be able to lead from the front like they seem to be talking about? Because it's a massive, massive industry for them.
Yeah, no, I think they will get there. Again, in terms of discussions with the EV industry participants that I've been involved in over the past couple of years, that is very much how they see the market evolving. So, is that they're going to have they're going to have an ever increasing amount of supply from recycled batteries to be, to feed the market. Now, that some people might go, oh, okay, well, you need nickel for 8 years, and then after that, it's going to be all recycled. And so, why build a mine for that time period? The overall timeframes are going to be relatively a little bit lengthy. So you're going to have the initial car battery use. What you're seeing sort of more commonly discussed is then they take that battery. It's still good. It's just maybe not as good for use in a car, and then they can repurpose it to be used in another battery application, which is still effective. And then at the end of the life of that battery application, then finally getting recycled, the components pulled out and then fed back into the supply chain. From a miner's perspective, it has a couple implications. One is, this is one of the reasons why the EV people are keen to have processing plants in market where the cars are produced. If you're going to get into a significant recycling program, you want to minimize the transport cost from where the car end of life battery ends up to where it gets to the plant to back to the back into the battery, or it gets put into a car to be reused again. So so I think so that's going to drive the EV chain to have domestic processing production in place, and in the future to be able to handle both primary and secondary recycled type sources. The second thing is, again, the Elon Musk send more nickel now is that's part of it. I mean, they see a massive gap in the next, next 10, 15, 20 years through that ramp up where they get to, everybody's going to buy their first EV. And then once you get to that steady state and the recycled amount of material comes through, they're going to need less primary again, but the market's going to be much larger at this point in time. But that, the critical time for them is this next 10 to 15 year period. So, again, it's a massive opportunity for, because you are going to see these kind of production shifts happen. It's important to sort of position yourself in the right place. And that's, again, what we're trying to do with Canada Nickel and Net Zero Metals is to be ahead of the curve and anticipate that's where the market's headed.
It's interesting. We've been talking to a company called Near Metals. We follow them because we quite like the management team. They did something really smart a few years ago, like 4 years ago, on a lithium project. Got a shed load of money, like 200 million, 220 million bucks or something like that.
Yeah.
And they have said, we're going to segue into something which is called, project generator type thing, where they create flow sheets within the EV kind of thematic. So one of the things they've got is the recycling things. So they're recycling automotive parts in Germany is where they're going to be doing it. So they smart guys, they've got the cash to do it as well. And they kind of find, big global partner, and then they kind of say, well, we'll do it here, and then we'll roll it out around the world. And the CEO quite so cheekily 2 weeks ago said, right, Elon Musk, we will recycle all of your batteries for free forever. Call me, kind of thing, which is, good on. But there's an ecosystem at the moment around recycling of all sorts of goods, including ordinary batteries, car batteries, the lot. And the typical model there is that the people have to pay to access this scrap. You bid. There's a kind of bidding system that happens, I think. I mean, do you think the automotive companies are going to try and control that kind of end of product life market to some degree, because these minerals, these metals in these batteries are going to become more and more expensive as we run out of them. The demand graphs would show that. So is that something that is a big enough deal for them, or is it just admin overhead? I'm trying to work out how do recycling or urban mining companies take advantage of the situation.
Well, the thing is, if you look, there's really two very good examples right now in terms of sort of higher value recycling that requires a lot of work to get it back into to a product. But so one is stainless steel. Nickel's always been the most expensive base metal, and the reason stainless steel is so highly recyclable is you've got several $100s worth of nickel, in every ton of stainless steel, which then, the value of that then funds a whole pile of collection, processing, and shipping activities to get that nickel back into the stainless steel production cycle. The other really good example is in the auto catalyst market. So again, you've got so many grams of PGMs in every catalytic converter, underneath your car, and again, none of those get lost. I can assure you, every catalytic converter gets stripped out of a car, whatever point. Sometimes maybe when the car's already in place in certain economies, but at certain PGM prices, but yeah, so those things do. Again, when there's enough value in the parcel of material that's there, the industry takes advantage of that and sets up those collection schemes. So unless there's some significant technical hurdle that causes it that needs to be overcome. Again, everything I've seen, I've got a good friend who's been running one of the larger pilot plants here in North America. There are some engineering challenges that need to be overcome, but it's not, again, it's not rocket science at this point in terms of you need to make some major breakthrough to be able to do it. So, I think, again, for the car companies, I think, they'll be concerned that the supply shows up, and they'll be quite happy to let other industry participants who have the distribution networks. Again, that's like a lot of businesses, it's that distribution network. So you have a lot of scrap dealers who have these massive collection, instead of distribution, it's collection. systems to grab the materials, at various locations and then get them funneled, to the consumers who want them. So, I'm sure that those scrap companies are sort of, getting ready to gear up to take advantage of what's happening in the EV space. And again, we never run out of ever anything. Price creates the supply response to feed it all in, right? So, So I don't think the car companies are going to worry. It is going to become a major source of supply. The PGM markets. That's why so people want to know why palladium's at $2,000 an ounce and platinum was down at 600. It's because in the late 2000s and early 2010s, people were buying diesel cars for the environment because VW had figured out VW had been cheating at that point in time. So you had this massive surge in platinum demand, and then 10 years later. These cars got to the end of the life. These catalytic converters came out, and we stopped buying diesel cars, and there's now this huge amount of recycled supply that's hitting the market. So, that helps create that massive gap in the palladium platinum market. Again, there are some other demand factors specifically for palladium, but that's why platinum, the fundamentals for platinum got so sloppy in a hurry.
That's interesting. I mean, that's fascinating. I enjoyed listening to your take on that. Actually, it's kind of everything's kind of interconnected, as it should be. One big thing that did happen in the market this week, I saw an announcement by Horizonte, who've actually put a mandate out to raise a lot of money. I think there's a consortium of about 5 or so, maybe 6 different banks to do that. But that kind of suggests that there's an interest in nickel in the market, which it just possibly hasn't really been there so over the last 12, 18 months. You see that as a positive sign?
Oh, no, it's great to see. I mean, at the end of the day, there's only a handful of projects in the West outside of Indonesia that, can deliver nickel to the market, in the near-term time period. Horizonte's project is one of them. So, to be able to get to this stage where you're looking, you've got a debt package for, anywhere from 50 to 70% of the capital, and then you're going to need the equity check, which is usually anywhere from 30 to 40% of the overall project ticket. And so, it sounded like they're in constructive discussions on both fronts. So no, I think it's a great sign to the market that the debt financiers are ready to step up, and then the equity providers are ready to step up at this point in time. So no, I was quite pleased to see that come through.
Yeah, so was I actually. It's a big signal, and if they can get that thing over the line by the end of the year, great news, and probably perfect timing as well.
Yeah,
great, nice little romp through the world of nickel this week. I thought it was a kind of quiet week, but as it turns out, not really, as ever.
Never dull.
Okay, well, look, let's catch up next week. Hopefully, a bit more news, a bit more movement. Hopefully, a few more nickel companies getting funded. That'd be nice.
There we go. Fingers crossed.